Hi there, welcome to Kneppy Invest and welcome to May the 22nd, 2024. Always have to look at my watch to get the date right. That is what happens when you're a shift worker sometimes. You just lose track of what day it is. Today is Wednesday because I know that because it says up the top there, ASX is now closed and opens Thursday. I am recording this video a little bit later than I usually do. Current time is 4:48 p.m. So the agenda for today's video is I'll go through some tweets. There was a few interesting tweets, particularly in regards to Nvidia that will be releasing their quarterly results tomorrow morning our time. And then we'll have a look at the ASX today, and pretty boring day just by looking at the indices up the top. Most flat, we'll say flat day, although small caps had a little bit of stress there, down 0.41%. And then we'll have a look at the best and worst performing companies, have a look at the top 5 announcements. A few other companies I'll just mention fairly quickly. Don't want to do a whole section or whole little section on those videos. Might talk about the companies I bought today. And also, I do have 5 charts I want to look at. So first thing I'm going to do in today's video, I probably should ask you, I am thinking on doing a video titled My 10 Largest Holdings. I never even thought about doing this before until I think it was earlier today when I thought, what are my 10 biggest holdings? And there were a few surprises in there. I can tell that much. Some not surprising because I did know what my largest holding was going to be. And I think I thought about this because I took some profits with Findy because it was my largest holding. And now it's getting to the point where, because of the share price rise in that company, it's now getting close to becoming coming in this top 10. And the other company that is my largest holding is IPD Group, and I have not taken profits in that company. Maybe I should. Maybe I should think about taking profits because that is my largest holding, IPD Group. So just leave a comment if you'd like me to do a video on my 10 largest holdings. I can definitely do that for you. And I might have to change the video or the contents of that video depending on when I do it. Now, let's have a look at these tweets. Okay, here's one from Bar Chart I saw the other day. Trump Media reported a loss of 327 million in the first quarter, along with revenue of 770,000. So not even $1 million, and the company was valued at 6.6 billion. That is the most ridiculous thing I have ever heard. I had been or did read about this Trump Media and how significantly overvalued it was because of its revenue. I just did not think it had only $770,000 of revenue in a quarter. Mind you, that's in a quarter, but still, analyze that, $2.8 million in a year, yet market cap or valuation of 6.6 billion. And if you do have a look at the chart for this company, DJT, I have a feeling it's probably nosedived. I hope it's nosedived. Not quite. It's all over the place. All over the place. But it probably should have nosedived because why would you buy this company? Unless you're a Trump supporter. And even then, you'd be silly to buy that company just because of valuations. Another one was this global stock market valuation from Capital Employed. Not surprising, the United States is way in the top there, top right-hand corner. I just wanted to see where Australia was. There we are, right in the middle. There's Australia. New Zealand is here. Australia right in the middle. What are the lowest valued? And they use Schiller Cape ratio and price to book to quantify the list or make up the list, whatever you want to call it. But what is the cheapest company? Well, by Schiller Cape ratio, it's maybe Poland, but Hong Kong's there. And by price to book ratio, Hong Kong. So Hong Kong and China's near the bottom as well. So maybe now is the time to think about China and Brazil and Hungary and Poland and Turkey and Austria, Korea, Singapore, and maybe not, what's DM America? DM America, Deep America? No, Deep. I have actually no idea. It's not Central America, South America, North America. There's a DM as well. DM. I don't know what DM. What's World AC? Interesting. Interesting. So the normal price to book ratio since 1979 is 1.9, and the normal Cape ratio since 1979 is 20. So all the countries in this sort of, it's very hard to see this red box, are overvalued, and all companies in this blue box down here are undervalued. And Australia right now is sort of in the maybe fair value. We are overvalued when it comes to price to book, but undervalued when it comes to Shiller Cape ratio. Okay, so that's that. And then we get a few tweets about Nvidia. The global economy is now dependent on one company. A few notes. Nvidia is the largest contributor to earnings growth for tech. If you exclude Nvidia, the tech sector earnings on a year-on-year basis would be -11 to -20%. It's also the largest in the SP and X growth, -5%. And that might be the reason why, if we go a little bit further up, we are waiting with anticipation for Nvidia's results that will be released tomorrow morning. Now, if you have been investing in commodities have done really well in 2024, particularly silver up 33.6%, copper 31.4%. But if you have invested in cocoa, up 74.3%, nickel not far behind, 28.3%, orange juice 70%. Well, there you go. Might thought would show some more here. Lean hogs 41.7%. What's interesting there is nickel up 28.3%. If you do listen to Vitura Corp, you might have heard Gaurav say the nickel industry is absolutely screwed. It's completely a wasteland or something like that, yet nickel's up 28.3%. So a lot of people do have these biases, and some of those biases can be wrong. Pretty sure he's really biased against nickel because of Indonesia and China. They flood the market with cheap pig iron, whatever it's called, pig nickel. And I think the other reason why nickel's up is because of what's happening in New Caledonia. I think that's another good thing about, it's not a good thing, but the reason why nickel has gone on a run is New Caledonia. But I think it went on a run before that. But don't listen to the experts. The experts can get things wrong. And the very fact that someone has gone onto Vitura Corp and said nickel is absolutely screwed. It's not going to recover. It's terrible. Up 28.3%. Gold up 16.7%. You can see disparity between gold and silver. So let's go down. Oh, I've got a lot here. Oh, this is from Kobayashi letter. Recent stats about credit card debt. 61% of Americans aged 18 to 64 paid for the groceries with a credit card in 2023. I always pay for everything with my credit card, and then I instantly repay it within a week. So just because you're paying stuff with a credit card doesn't mean you're in high debt or you need the credit card to pay for things because you're not saving money or something like that. So I don't like stuff like that. You're just drawing a long bow, whatever you call it, drawing a crossbow, longbow, by that sort of statistics, because a lot of people these days just pay everything with their credit cards like I do. Get points. Here he is, Jesse Cohen. The entire US economy and Nvidia is just lifting the entire US economy, possibly the entire world economy. So no pressure, Nvidia, on your results tonight. I have no idea how it's going to play out. Will the brutal momentum continue from quarter? So the market cap of Nvidia is 2.32 trillion. Now, that is equal to the combined market caps of Intel, Micron, Texas Instruments, Applied Materials, Qualcomm, AMD, ASML, and TSMC. I do own two companies in that list as well, Micron and TSMC. I was thinking about buying Texas Instruments, and the share price has gone on a massive run. And I was a little bit disappointed by that. But, yeah, who knows? Third largest company in the world, behind Microsoft and Apple, and wouldn't be surprising if Nvidia is the world's largest company within the next year, and it's able to maintain that lofty levels and continue to grow. It wouldn't surprise me at all. And finally, ARK Invest founder Cathie Wood says Telstra will trade for $2,000 in 5 years. Now, that's really interesting because there was so that's $2,000 in 5 years. Share price of Tesla is $186.60. And the surprising thing about that is there's a podcast that I'm going to listen to, or maybe listen to. Tesla, this is from the 7 Investing podcast. Tesla, the company, is worth $104 per share. Here's why. They did a DCF. You should not use a DCF to try to value a company like Tesla. And for those who might have heard the story, I did tell this story once before. There was, in fact, I'll try to do it now. So it would be Nvidia overvalued. See if I can find this article. I'm trying to remember what it was. Was it the alpha spread? And this, and hopefully you'll understand. No, it wasn't that. It's a chance they could have got rid of the. Now it was seeking alpha. Was it this one? No, it wasn't this one. This is. I'm looking for an article that was written in April of 2023, and more than likely won't be able to find it. There's a chance they got rid of the article because it makes them look pretty. Does make them look pretty silly right now. And when I actually did do this, did do the Google search, 2023. Maybe I should say. I think it was written in April 2023. And I bet you I can't find it because I bet you they got rid of it. Okay, so I'll try to remember now. So back in April 2023, this guy did a valuation of Nvidia and said this company is the most overvalued company in history, and he used a DCF, and he also showed in that article all the numbers in terms of cash flow for the next 10 years. Yes, the next 10 years up to 2034. And if you have a look at that particular DCF and the cash flow that Nvidia was going to produce in 2034, it was lower than what Nvidia has produced in the last year. And he was way out. And he said, because of this discounted cash flow, and these are all the cash flows of the company, because of his assumptions, he said this company is ridiculously overvalued. And he was wrong. Within a year, he was completely wrong in regards to the cash flow. The cash flow in 2004 or 2024 was greater than the Nvidia's cash flow projection that he had for 2034. He was out by 10 years, or maybe it was 9 years. And that's the reason why I don't use DCFs, because more than likely for these type of companies, you are going to be wrong. You're going to underestimate, and that's all reason you want a bit of a, what's the safety valve? What's the word they use? Margin of safety. You're trying to get a margin of safety, so you're going to be conservative. But I think a lot of analysis are too conservative. A lot of investors are way too conservative when they're looking at projections for these growth companies. So this particular podcast, I'm going to be interested to see their assumptions and how they got that price for Tesla. And the whole point is, look, Cathie Wood, ARK Invest, says Tesla is worth $2,000 now, or will trade for $2,000 in 5 years. And I can guarantee you, the assumptions they're using are absolutely ridiculous. So I had a look at one of their articles they released on Tesla last year, and some of their assumptions were just like, this is the ultra bull case. And even their bear cases, they're just not conservative enough. They're too bullish on Tesla. Anyway, so Tesla, yeah, their share price would have to increase 5-fold from here to get to 2,000. I'm a Tesla shareholder, and I think she's way too bullish, or they're way too bullish. But I think a lot of the bears are also a little bit too bearish as well. Okay, I've gone on to a little bit longer than I wanted to started this video. So let's get rid of the bookmarks, Twitter. Oh, by the way, so yesterday I was looking at my technical portfolio performance. I was wanting it to get over 60%. In the last minute or so, it did get over 60%. Now we're up 61.09%. So the next target is 70%. So this is the last time I'll show you this particular share site portfolio until we get to 70%, if I remember. So another good day for this technical portfolio. And I'll tell you about some of the trades I made today. I bought 4 companies today, by the way. Earnings Canada, there it is. Tomorrow morning, Nvidia. I like this time. They've got some stars, which means it's aftermarket. Sunshine means it's during trading or before trading. So we have TJX, Nvidia, Target, Snowflake, that's right, and Williams-Sonoma. I actually do own Williams-Sonoma as well, but a fairly small holding for that company. So don't know to look at that. So let's have a look at the ASX today. And I'm assuming this automatically refreshes. Yes. Let's go straight down to sectors and indices because this video is already taking longer than expected. Really interesting to see telecommunications down 2.54%, discretionary down 1.37%, energy down 0.73%, utilities up 0.9%. A bit of a discrepancy between utilities and staples. Both I would consider defensive, but for some reason the market has piled into utility And to be honest with you, there's not many utilities on the ASX these days. What if this list? There it is. So what has done well? I had to have a holding in AGL, trading holding. I have been thinking about APA Group because it looks like it's breaking out. So let's have a quick ganzer at APA Group. Quick one. Just trying to share ideas with you. So I think it's trying to break out. We have had a little bit of a dip, and then we have seen some buying when the share price gets to below about $8.70. So I think there is further upside or possible for APA Group. And let's have a look at the percentage change. Okay, so some big companies here: Origin Energy, Contact Energy, Meridian Energy is pretty big as well. AGL is pretty big as well. APA Group. So some big companies in here, but some very small companies as well. The top performing company, Locality Planning Energy Holdings, has a market cap of 22.5 million. Another one here has a market cap of 10.35 million. So hopefully they have what's in telecommunications. Why has this sector collapsed today? Why indeed? Let's have a look. Percentage change. Oh, it's probably because of Hutchison Telecommunications dropping 16.2%, and Telstra. Oh, Telstra. That's why. Telstra down 4.2%. And I would suggest that might be by far the biggest cap company. Well, not by far. We have REA Group and Car Group and Seek and Nine Entertainment and Chorus and Spark New Zealand. It's interesting. I might consider Spark New Zealand to be, I can see it in this sector. I think it's mostly because of Telstra down 4.2%, and that would be the biggest company in this particular sector. Anyway, banks had an okay day today. I can't complain. And let's have a quick look at the ASX 20 before we move on to the gainers and losers. And 7 companies up, 1 flat, 12. 7 companies down, 1 flat, 12 up. Best performing company in the ASX 20, we have Transurban Group, which is, I would put that in infrastructure, I suppose. Utilities, I'll put that in utilities. Utilities infrastructure. Rio Tinto, WiseTech, Macquarie Group, and ANZ, top 5 companies in the ASX 20. And the bottom 5, well, Telstra, yeah. And that's on the back of their update yesterday. And so the share price has actually been hammered today compared to yesterday. So maybe some of the analysis had a look at that update, and today they decided, well, we should sell out. Yeah, look at that. This is an ugly looking chart. I think I did show you Telstra yesterday, maybe. So this is an higher volume today. So what I think has happened, that the analysis fund managers have looked at their models, and this is what happens sometimes. It takes some of the fund managers a while to put the new numbers into their models. It would take weeks and weeks, maybe. And this is a really bullish or bearish, not bullish, bearish chart. I am well willing to trade Telstra, but the get out for Telstra, if you were trading it, was back on 17th of August when they released results. Share price on that day fell 2.8%, and that was definite shift in sentiment in this company. Okay, Telstra, Wesfarmers down, probably a little bit overvalued. Aristocrat, that's okay. They've had a good run. Then Woodside and Santos, so energy is down. That's right, yes. Now let's have a look at the best performing companies and the worst performing companies. We'll see how many of my top 5 announcements of the day are in this list, and maybe some of the honourable mentions by market cap. We have Charger Metals, the best performing company, and I do have this in my honourable mentions. So I will have a quick look at Charger Metals, and otherwise nothing much in there at all. I can't see anything. I might miss something because I'm going through this pretty quickly. No, Kingrose Mining. There it is. That is in my top 5 announcements of the day, up 21.3%. Coming in at number 3, Kingrose Mining. It's a fairly small company, but whenever a company releases an announcement and you name drop, you more than likely share price will rise. And you'll know by what I'm meaning by saying name dropping when a company releases an announcement, when we look at Kingrose in a finer detail later in the video. By market cap, Webjet. Yes, that's in my top 5. In fact, number 2, Webjet. I'm very happy to see Southern Cross Electrical Engineering there. I have added to my trading portfolio in that company, and very happy to see Cosol up 8% because I'm an owner of that company as well. And that comes in at number 5 in the top 5 announcements of the day. And MedAdvisor comes in at number 4 of my top 5 announcements of the day, up 14.1%. Probably, no, not probably, good news for investors of that company and for those who are looking for important inflection points of companies. Possibly MedAdvisor has reached that point, and it's not surprising to see a little bit of interest in that company. And the number 1 company of the day in terms of announcements is not on this list, but I can almost guarantee you, I should go through this to see if there's anything else. No. But I will guarantee you this company will be in the top losers. Maybe not percentage change. What's happening to Beam Communications? Down 20%. Otherwise, it's not. Oh, there it is. Aegis Automotive, down 15%. I completely missed this. And I'll talk about why I completely missed this announcement when I talk about Aegis Automotive towards the end of the video. And I think this is a little bit of a problem what happened today with Aegis Automotive and their announcement. And I'll explain why at the end of the video. And by market cap, well, Aegis Automotive is up there. Other than that, Southern Cross Gold is sort of a trading company and that has had a bit of a dip. That could be a buy the dip situation with Southern Cross Gold. Aries Resources down, Cogstate, Premium. So with Aries Resources down, does that mean copper had a little bit of a bad day? And a company I own, Adrat, down 8%, but that company is at $70 million. That company is dirt cheap right now. Okay. That's top losers of the day, and wait for the top 5 announcements. I've already named all 5 companies. So what I'll do right now is go through the announcements of the day, have a very quick look at the honorable mentions. And the first company I want to take a look at is Plenti Group. They did release something, and the share price did rise, well, only 2.9%. That's not exciting. But I thought I'd just have a look at the chart for Plenti Group. I'm trying to remember what the announcement they did release. Was it half-year results or full-year results? Could have been full-year results. Yeah, full-year results. But the interesting thing about the chart was this sudden increase in share price back in November. Pretty sure that was a deal with NAB. And the very fact the share price has gone sideways since then is comforting because the share price was in a long-term downtrend. So I think the downtrend has definitely come to an end. And the very fact the share price hasn't gone back to those levels means there was some substance to that announcement. And there is more, I think, a better chance the share price might go up from here than down. I wouldn't say this is a trade or anything. This is a lender. I believe it's some sort of lender. Let's have a look. Consumer lender and investing platform. Lending to credit-worthy borrowers in the following segments: automotive, renewable energy, loans, and personal loans. So that sector has been hit hard over the past few years. And I do think when this sector does recover, a company like Plenti Group could be interesting. So I am starting to follow these companies a little bit more. Okay, I'm spending a little bit too much time on these honorable mentions. Vitura, they're doing a strategic review. Strategic review, no reason to be holding this company. And even today on the announcement of the strategic review, share price only up 2.22%. Ugly looking chart. I think one reason I wanted to show you this company because someone actually did mention this in a comment recently, and I just don't like this chart. And they, in fact, in the announcement, and the reason they're doing strategic review is the underperformance of the business. They wished it was performing better. And seems like the market's got it right. Performance of the company is underperforming, or the company's performance is, or they're underachieving, and the chart looks absolutely horrible. Vitura Health, I'm pretty sure they sell marijuana stuff. I think they have, I can't explain what they do. Something to do with marijuana. Okay, I'm going to go past that CHR. Ridley released something today. I think it was a sort of update. Oh, down 5.7%. I actually did not expect that. Ridley Corporation is an agricultural company. A market update. Wilson's at Ag Food Conferences. Would I think about buying Ridley right now? No, that's the definite answer. Share price has fallen almost 33% since the start or February of this year. And this chart looks pretty ugly right now. Weekly chart might show us something different. The weekly chart looks really good. And this could be a buy the dip situation for long-term investors. Probably that's a way to view day charts or daily charts versus weekly charts or even monthly charts. So the weekly and monthly charts are more catered for long-term investors. And when I look at this chart, I'd say share price has been an uptrend. This is sort of a buy, a little bit of a dip, but and I'd say there is a bit of a support level round about there, a support zone right there in that area, and the share price is moving towards that support zone. So possible areas of interest for Ridley Corp. I've not done any research on this company. It's an ag company, in my opinion, and I am rambling on a little bit too much. And then we have Supply Network. Supply Network, this could belong possibly in tomorrow's video because they released an announcement at 4:15 p.m. Full year guidance update. It was a one and a half line update. This company doesn't release many announcements. So directors are pleased to advise consolidated sales revenue for the year is expected to be around 300 million with profit after tax around 32 million. That's it. And if you go through their announcements history, this company doesn't release much at all. So this update in May, previous to that, it was the half year results in February. Before that, in late January, they did an earnings forecast half year and also a dividend distribution. And then in November, it was a chair's address to shareholders, just an AGM. And before that, it was full year results in August. That's all they seem to release is half year results, full year results, AGM, and forecast NPAT and revenue. I don't mind that because have a look at the chart. I won't show you the chart for Supply Network, but it's an absolutely stunning chart. So they're doing something right. And the last two companies I want to look at are CHR. Was this the best performing company the other day or close to it, up 40.85%? Lithium and Niobium anomalies defined at Mount Gordon. If you know anything about Niobium and why that might be important, leave it in the comment section of this video. I don't know anything about Niobium. So now is time to learn about Niobium. Niobium, NB. Chemical element refractory metal of group 5 of the periodic table used in alloys, tools and dyes, and superconductive magnets. Niobium is closely associated with tantalum in ores and properties. Is niobium mined in Australia? Australian mine production is not available. It is possible that niobium, I think that sounds better. Niobium is produced as a byproduct at some lithium tantalum operations. That's the first time. It's not the first time I've heard of this, but it's the first time I've heard of mining it, and first time I've seen the word in an announcement. Anyway, is this a time to get excited about Charger Metals? Let's have a look at the chart. CHR. Charger Metals. No. That's the simple answer. No. Looks like they IPO'd on the ASX back in August 2021. Answer to this is no. But what I have done, before I started this video, I have created a new watch list. It's called High Volume Spec. And I want to try, this is my new project, I want to try to understand, and one of the reasons is this chart here from Australian Gold and Copper, up 20.5% again today. And the last 4 trading days, it's gone from 8 cents to 47 cents. So what, and that's the weekly chart. So let's have a look at the daily chart. So it's not the full trading. It's last 1, 2, 3, 4, 5, 6, 7 trading days. It's gone from below 10 cents to 47 cents on a really good volume. So why has the share price of this company absolutely taken off after the first initial jump, which was the 10th of May? When you compare it to some other companies, when they had this little spike in share price on high volume, the share price doesn't do anything. It falls all the way back. Now, this is a company I mentioned yesterday, Sierra Nevada. So I put this onto the watch list. I put the other company onto the watch list that I looked at yesterday, which is Fingold. And I put Charger into the watch list. And another company I put into the watch list is Gib River. They had a really good day yesterday and a really good day today. And is this an indication? What I'm looking for is signal or any sort of pattern. What distinguishes those companies who have this really good day on high volume from those companies? And I think if we have a look at one of these other companies, yeah, so if you have a look at Charger Metals, so we can see the share price went on a run back in November last year. The volume wasn't that high, and there was another run in the share price back in April, May last year. So why could the share price go on a run now? What would turn around? Why would this be different than these other 2 times? Is it just the volume, or is there any sort of pattern you should be looking at? I don't know, maybe a 1 month, 2 month high, I just don't know. And maybe there is no answer. Maybe this is the reason why to say well clear of these sort of high volume spec stories. And I'd say all these 5 companies are definitely spec stories. So just stay away from stories. That possibly that's the answer I will have in the end. And finally, the last company I wanted to look at and put down here was CGN Resources, down 33.87%. They actually did release an announcement, Web Project Drilling Update. So obviously, without even opening up this announcement, it was negative. You don't see a share price fall 34% on that sort of thing. So is this, well, I'm not even sure why I'm showing you this. Could we have seen a sign that this announcement might have been coming? So CGN Resources hasn't been on the ASX too long. In fact, it's been on the ASX less than a year. The share price was actually, the chart was looking really good. Share price got as high as 48 cents in early May, so 2 weeks ago, and the share price has just plunged. And in fact, the share price plunged before this. It fell from 48 cents to 31 cents, and then the announcement today. So there is a possible, that was a possible sign. Now, some people might have been buying last few days because of the buy the dip situation. Share price had fallen, and they thought, ooh, maybe the share price will continue to run. And they would have been wrong. And the share price is now down to the levels it was back in March. Anyway, no interest in this company at all. I just would like to show you different charts and stuff, and maybe you can learn something from this. Okay, so those are the honourable mentions. Now let's have a look at the top 5 announcements of the day. Starting at number 5, we have Cosol. And this is a company I own, up 8.1%. Cosol signs multi-year managed services contracts. Now, typically, I don't get excited about contracts, and I probably wouldn't have put this onto the top 5. But to be honest with you, the other companies that were in the running to be in the top 5 announcements, most of them were blah. Now, if Supply Networks released their announcement a little bit earlier than they did at 4:15 p.m., that might have made it, but I'm not sure how the market's going to react. So Cosol just made it into the top 5 list because it was a company I own, and the share price went up 8%. Simple as that. And if we have a look at the chart for Cosol, the chart looks pretty good. I'm not complaining. This is another company that, actually, chart looks pretty good. So this is a company that it's a small cap company. It's in my trading portfolio, and I'm just hoping the share price of this company just keeps on rising for the next 3 or 4 years. And that way I can maintain a holding in this company for as long as possible. I don't care about any of these dips. Dips don't matter. And I bought at 96.5 cents. I was being a little bit too aggressive there. I should have waited for a dip. But definitely, I do have a sell point. My sell point is if the share price of this company gets below about 90 cents. And at this point in time, well above that level, and no reason why the share price will fall from here. And in fact, if anything, today was pretty bullish when you look at Cosol. So up 186, market cap 186 million, dividend yield of 2.34%, price earnings ratio 21. So I think based off the chart and based off what I know of this company, it's a nice little trade. If you look at the annual revenue growth, it's gone from $12 million in 2020 to $75 million. So the first thing I look at is growth. And I thought there was some value in this company back when I bought at 96.5 cents. Anyway, that's Cosol. If you don't know anything about Cosol, just go to the website. Just go to the website, Cosol. Here it is. Here it is, global provider of end-to-end asset management solutions. Yes, that's the best way to explain it. I would have fought over my words if I tried to explain it without looking at the website. And that's okay. Some might say you should know what a company does if you're invested in it. Well, I know what they do, but trying to express what they do, some people might say, well, you should be able to say in an elevator pitch, you should know exactly what to say in a few words what a company does. And that's probably fair enough, but this is just a trading position for me anyway. And to be fair with you, there are some traders out there who know nothing about a company they're invested in, or trading, I should say, or investing in trading. They're the same thing, really. Okay, rambling over. Let's have a look. And that's coming in number 5. We have Cosol. Coming in at number 4, we have MedAdvisor. Possibly, this could have come in a little bit higher. Possibly, but it's a smaller company than Webjet. And Kingrose Mining share price rose a little bit more than MedAdvisor, but up 14%. MedAdvisor record financial year 24 performance with positive EBITDA and NPAT. I saw that and went, "Ooh, that's exciting." So this company is now profitable. No, that's the guidance, financial year 24 guidance. So they will be profitable for this financial year. EBITDA expected to be around about $7 million, and profit between $500,000 and $800,000. You know, might be laughing at that, but it's profit. It's profitable. And last year they were loss making of about $12 million. So a significant improvement from last year. Revenue up to $120 million and really nice growth. Really nice growth of last year. So I would say it was almost $100 million last year. So a good growth in this company. I'm probably not the biggest fan of what they do. Global leader in pharmacy-driven patient engagement solutions that provide individualized patient experiences to help remove barriers of care. So I think it's just an app. That's what I think they have, is like an app. And then you can go like use this app to get stuff from the pharmacy, something like that. You can think that's going to be very popular in America because Americans are just absolutely fascinated with drugs. And if you've never been to America, I think you go to maybe the first night in America, you're starting to watch TV, you'll be surprised with how many drug ads there are on American TV. It's ridiculous. Anyway, let's have a look at the chart. So I've probably been a little bit unfair on the company because the company is EBITDA positive and profitable, and the market likes that. And look at the chart. This is actually a pretty good looking chart. My own concern is there's a lot of volatility here, and typically the last quarter, the quarter we just had, is typically the best quarter. So there's a bit of seasonality there, but the share price is at a long-term high. Last time the share price was this high for MedAdvisor was way back in 2022, early 2022. So 2-year high for the company. But again, if you just look at the weekly chart, share price has just gone sideways the last 8 years, according to this. But in fact, the weekly chart looks pretty good as well. Breaking out, possible breakout for MedAdvisor. For some reason, I'm just not that enthused with this company. I don't know why. For some reason, but just because I'm not enthused doesn't mean you don't have to be. I'm just not enthused. Next one we have Kingrose Mining, the name dropper, up 21.3%. Kingrose and BHP, the biggest company in Australia, is getting into a relationship with Kingrose. Enter industry-leading exploration alliances. Marketers got excited about that. I didn't even open up the announcement. I don't care about these sort of things because more than likely this would not be beneficial for Kingrose unless they have something that BHP wants. Possibly they do have something BHP wants. Are they in copper? I know BHP is obsessed with copper. So is that what Kingrose does? I have no idea. Here we are, copper gold. So I'm thinking these are the projects. So this is in Norway. Norway. Yeah, Norway. Copper, gold, nickel, copper, PGA, nickel. Is that NI is nickel? Is NI nickel? NI. Nickel, yeah. Ooh, that would have been very embarrassing if it's not. What's PGE? Is that PGE? I should know this one because I have seen it before. PG minerals. PGA, platinum, palladium, rhodium, ruthenium, osmium, and iridium. Interesting. And gold. And there's more. Finland. This is in Finland. What was the other one? Finland. That's Norway. So they've got something in Russia as well. There you go. And Finland, nickel, copper, cobalt, zinc, copper, nickel, copper, cobalt, nickel, copper, cobalt. And what's the... Okay, here we go. The alliance terms, BHP to sole fund up to $20 million. 31 million Australian in regional generative exploration of over up to 4 years. So this is definitely of benefit to Kingrose. BHP may earn up to 75% in each defined project in 2 stages by sole funding up to 55.8 million Australian dollars on each defined project over 7 years. So overall, this could be beneficial for Kingrose, but if they do make it, highly beneficial for BHP, although BHP is really big. So how big would this be for BHP? And maybe this is what BHP should be doing more of, getting into these sort of relationships with smaller companies instead of buying the companies, maybe. I don't know. Anyway, I'm rambling on again. So let's have a look at the chart for Kingrose. Is this time to get excited? Is this a breakout for this company I have never heard of before? Now, this is the weekly chart, and the share price of Kingrose was up to almost $2 back in 2011. Now it's 5.7 cents. So hoping you were not a shareholder of this company back in 2011. I'm hoping you bought some shares in this company in 2009, late 2008, and then sold them in 2011. Bought them at 10 cents, sold them at $2, 20 bagger. And then I hope you didn't keep on holding. So let's have a look at the daily chart just to see if maybe sentiment is shifting for this company. And share price was starting to run just before this announcement. Pretty big volume coming in through today. A little bit of selling, so extra supply of shares on the market, which is understandable because the share price has been significantly higher in the past, and you're going to get a lot of resistance when that does happen. All those shareholders who bought in 2011, who haven't got out, are maybe thinking now's the time to sell. Share price is up 21%. I should be selling, and possibly now is the worst time to sell because of this positive news. Maybe, I don't know. Kingrose, should I put Kingrose into my high volume spec? I think I should, because this is high volume and this is spec. Markup 35 million. After today, the markup would be 40 million. So it hasn't really increased that much when you think about it. 35 to 40 million. Share price did get to a high of 6.2, low of 5.3, 5.7. Rambling too much, Michael. Move on. Coming in at number 2, we have Webjet. I'll talk about Webjet later when I talk about companies I bought today. Yes, Webjet is one of them. So they released their full year results. The thing that really interests me about these results is not the numbers, it's this announcement. Proposed separation via demerger. Demerger, not the merger, demerger, D-E-M-E-R-G. For those who think I was trying to speak with the German accent, I was not. So they are thinking, exploring, separating or demerging Webbets and Webjet B2C. I would love that. Why? Because I think if you separated Webbeds and Webjet B2C, business to consumer, I would only be interested in Webbets. So you're separating the most, by far the highest quality part of the business. By far. The only reason I'd be interested in Webjet would be Webbeds. Webbeds. It's growing at a significant rate. Have a look at their presentation, and you can see how strongly Webbeds is performing, particularly compared to their business to consumer B2C. In fact, sometimes if you do go to the annual report, in the notes section, they should separate the numbers. So let's have a look if they've done that. I actually haven't had a look at this. This could blow up in my face. Let's just increase this font. Not trading at a... When you look at the cash flow of this company, I have a feeling... So profit was... What was the profit? Profit was 72.7 million. And the operating cash flow... Oh, they're doing it sort of the US way. So they start with the profit, work their way back, get to a cash flow from operations. Cash flow from operations is 196 million, significantly greater than the profit. I would prefer to look at operating cash flow and free cash flow. Free cash flow would be a little bit more. So earnings before interest, tax, and depreciation, amortization, or EBITDA, 191.8 million. And if you do use those numbers, this company is not richly valued after these results. But let's have a look at the notes to see if they've separated this into segments. And that is one thing companies will do in the notes, and sometimes you'll see this in the presentation. They separate or do a revenue, what's it called, disaggregation, where they separate the revenue into different segments or geographic regions. And they've done it here in the first section, which I'm very thankful for. So they've separated into business to consumer. And I'm assuming business to B2B is business to business travel. Is Webbeds there? We can't I don't know. I don't know. And there's the geographic regions. I would love to see the sometimes companies will put the definition. So revenue streams, yeah, we know that, but they should sometimes have a definition of business to consumer, business to business. I know it seems pretty obvious, but does web beds fall into one significant or one particular category? I don't know about that. Anyway, so it's a complete waste of time. But anyway, I implore you to have a look at the presentation, just how good WebBeds is performing. And actually, it says there, a global B2B travel distribution and Webjet B2C. So they want to separate their business to business and their business to consumer. And I shouldn't have closed. I should not have closed the annual report. So they gave it sort of a definition in their demerger. So I'm going to assume now that WebBeds is business to business and Webjet business to consumer. That's what they're separating, which now is clearer. So then we can just see what I was actually looking at. We can see how both different segments have performed because they're separating it. And you can see, hopefully, you'll be able to see why I'm interested in one part of the company, but not the other. Okay, so business to business. Okay, so here it is. Business to consumer, revenue was up slightly, 127 million to 142 million, up slightly. Underlying EBITDA, 45 million to 55.9 million. Total transaction volume up slightly. So small growth in business to consumer. But compare that to business. Total transaction value from 2.8 billion to 4 billion. Revenue from 236 million to 328 million. And underlying EBITDA from 117 million to 162 million. So significant growth in business to business or web bets compared to business to consumer. And if they do separate these two entities or these two segments into different entities, there is one company I would be attracted to. And in fact, this is why I've taken a position in the company today, is because on the thinking that when they separate, I can sell the business to consumer part of the business and keep the really high quality business, which is web beds. It could blow up on my face because it might not go through at all. And lastly, the chart for Webjet. And the chart actually looks okay today. There was a bit of selling today. So share price got as high as, was it 970 or so, and closed at 909. That's okay. I don't mind a little bit of selling today, but I don't want to see the selling continue into the next few days. I don't want to see the share price get back down to where it was before. And if it gets below the highs we saw recently, that would be a bit of a concerning sign as well. But the share price is at a long-term high. Yep, definitely a long-term high. But beware. Doesn't mean the company is cheaper than it was back here, because shares on issue have exploded because of what happened during COVID-19. So I'd say the valuation of the company is its highest it's ever been. But it's okay, because WebBeds is absolutely exploding. And I think this company is better placed right now than it was back in 2019. And finally, we get to the company of the day. And this company has an unfortunate ticker code, APE. Eagers Automotive, down 15%. And why do I have issue with this company's announcement? And I don't know who to blame. So the company released 4 announcements today. AGM material, including market guidance, results of AGM, change of directors interest notice, and analysis investor event details. The one thing you'll notice here, none of these announcements were marked price sensitive or market sensitive. The reason that's important, when I go through the announcements every single morning, I filter out all non-price sensitive announcements. In ComSec, this is what you do, or this is what I do. So you have a filter. And the reason I do this, 430 events released today. I want to decrease that significantly. And I just want to limit that these announcements to only price sensitive announcements. Those announcements that might change sentiment in the market. And you go from 430 events to 116 events. And because these announcements were not marked price sensitive, I completely missed it. The only reason I noticed is when I had a look earlier, before I recorded this video, hey, what's it called? Eagers Automotive was down 15%. I was like, what's happened? Oh, they released an announcement today titled AGM material, including market guidance. Market guidance should be a dead giveaway that this announcement is price sensitive. Look at the market reaction, down 50%. That should tell us, whoever made the decision, that this announcement is price sensitive. I'm not sure if it's the company to blame or the ASX. The company does tell the ASX what they think the announcement is in regards to price sensitive or not. But ultimately, this is a few years old, so they might have changed the decision making. But ultimately, it comes to the ASX. They're the ones who decide ultimately if the announcement is price sensitive or not. But the company does have a say. So I'm not sure who's to blame here, but it's a dead giveaway. Market guidance is always price sensitive. I should get in contact with the ASX and yell at them. Anyway, I'm not even going to open this up. I had a quick look and yeah, it's negative. It's negative. Things are slowing down. They go through all the reasons, a plethora of reasons why the market's slowing down or their performance is slowing down. Share price down 15%. Now, here's the thing. I mentioned in one of my previous videos something about luck. And one of the benefits of technical analysis is you can increase your luck substantially. You can become more lucky than unlucky just by looking at a chart. And here's another example of a company. I used, I think I talked about James Hardie in regards to this. So James Hardie released something negative the other day. In fact, that's the weekly chart. Yeah, yesterday it was. And if you look at this chart, there was no reason why you had to be in it. Share price was collapsing before this negative announcement James Hardie released. And now let's have a look at Eagers Motive chart. Would you have been in this company before this? Look at the sentiment in this company nosedived in March. Share price was $14, moved into a downtrend, broke through support levels. In fact, it broke through two support levels. So one here and another one right here. In fact, there was no reason to be owning this company at all. Unless you're in it for the long term, maybe that's understandable. But other than that, no reason why to be owning this. And then a negative announcement today. The market was telling us something before this announcement. Share price was in a downtrend. And the reason this is important, I have very rarely seen a company whose share price is in an uptrend release a negative announcement. I've seen it once that I can remember. That was TPG, way back when they were run by David Teo. Back would have been maybe 2015 or something, 2016. And at the AGM, he said, I think our growth phase is coming to an end. And the market hated it. They didn't want to hear that the growth phase is coming to an end because at that point in time, P ratio of TPG was about 30 or 35 or 40. Might have been higher than that. The share price did fall. Share price was in an uptrend. A lot of times you will see a company release a positive announcement when the share price is in a downtrend. Share price tries to run, but because there's so much resistance, because all these investors have bought in higher prices, share price really struggles to run. So you need some sort of chart where share price or the company releases a really good announcement where the share price is not in a downtrend, preferably like neutral to an uptrend, or at least the share price going sideways. So even if this announcement was positive, I don't think you would get much of a benefit. The share price might have popped up initially, but they would have been selling. Anyway, so market can tell it just by looking at charts. We can, and using charting in our decision making, we can increase our luck. And I think I talked about luck when it comes to, it was GDC, wasn't it? Global Data Centers. So share price of this company was in an uptrend. So I bought some shares in this company at 236 on last Thursday. And then share price popped up, was it 20% on Monday? And I went, oh, I'm pretty lucky here. It was like, no, it wasn't luck. Share price in an uptrend. Company released some good news. You're more likely to see companies release good news when they're in uptrends compared to downtrends. Put it that way. Anyway, that's all I've got for the announcements of the day. I did make 4 acquisitions today because I want to be true to my process. So I bought Nuix. Yes, I bought some Nuix shares today. I went, I might have a bias against this company, but I should not make decisions or decisions based off personal biases. Just look at the chart. And I saw the share price dip today and went, okay, this is time to buy. So I bought some at, was it 293? And I'm already in profit. It's up to 302. Some people might say, oh, there's a gap there. I don't care about gaps. So here is it. Here's a gap here, massive gap here for Nuix. And they say that gap's always filled. Well, where's the filling here? It's got nowhere near this gap. So whenever someone says, I'm just going to wait until it fills the gap, you wait. You might be waiting 10 years. So Nuix, I also bought some ALQ, another company where I just don't think, yeah. And this was just on a breakout. So share price has sort of gone sideways today, down a little bit, but that's okay. I could have waited a few days just to see or make sure the share price doesn't get back into this support zone or resistance zone, which is a possibility. So maybe I could have been a little bit more patient with this one. OFX, I bought some shares in this, a classic breakout. In fact, I mentioned this was a breakout in yesterday's video. I went, I'll buy some shares. It's a breakout. It could go against me, but that's the whole thing. If I just buy company shares who have just broken out, some will play out as I expect them to, some will not. And I have been trying to decide, I have been filtering some companies that have broken out of my portfolio because I just didn't like the companies or something like that. And some of those decisions have been wrong because the share price keeps on going up. So I think I should leave my bias out when I'm making the decision. So OFX Group, I have traded this company in the past. So possibly, just like last time, this could be a good trade. And then Webjet, yeah, bought some Webjet as well. I was thinking of buying a few other companies, but I thought 4 is enough in one day. And I expect 3 of these 4 to be good trades. In fact, even if 2 of them, 2 out of 2 are, if I get 2 out of 2 right, 2 out of 4 right, that'd be okay. So Bendigo Bank and Intertech Pivot. In APA Group, there's the other companies on my potential buy the breakout. Well, APA Group's not a traditional breakout because there's no financial or no price sensitive announcement released by that company, but the chart is just starting to look pretty good. And in fact, no, I don't. And finally, some charts for you. 5 charts. I was going to keep this video to 30 minutes long, but again, I do want to show you these charts. So Dalrymple Bay Infrastructure did release an announcement today, some sort of update, and the chart itself actually looks pretty good, but it's infrastructure. And they did say some weird things in their announcement that I don't know. Those weird things are some jargon. So the AGM, they had the AGM. TY, what the hell is TY? So this is TY 24-25 guidance. I don't know what TY is. If you know what TY is it trading year, total year? Sometimes they have. They do. I was going to say they didn't have it in their definition list. They do. TY is a TIC year. Well, what's TIC? Commencing on 1st of July and ending on 30th of June. TIC year. Trading internal combustion. TIC. Oh, here it is. Terminal infrastructure charge. Okay. Again, I don't know this company at all, except they're an infrastructure company. I'm pretty sure it's coal. It's like a coal thing. Near, is it Bowen or is it Bowen? No, I could be completely wrong where it is, but I'm pretty sure it's something to do with coal. Well, it's a loading, sort of a loading platform, something like that. Anyway, Dalrymple. But the thing is, the chart looks interesting. And in fact, this is the sort of chart I would expect from sort of an infrastructure company. It's slow grind up. But the chart looks actually pretty good. Let's have a look at the weekly chart for Dalrymple. Share price going sideways, and then there's a nice little breakout back in October of 2022. And that was around about 230. The share price hasn't gone up much. And I'd say the dividend yield, 8.22%. So it's a nice dividend. Next chart I'll look at is TNE. Oh, yes, TNE. So Technology One released their results yesterday. Initially, the share price actually fell. And whoever sold on open yesterday are kicking themselves because this is a breakout. Technology One is a breakout. I'm calling it right now. This is a breakout. Share price trading in a range for the last year. When the share price got to about $17, we saw selling coming in, forced the share price down as low as $14.60. Reached that level 3 times during this 1 year period. Yesterday's share price initially fell on open, rallied during the day, which was a good sign. Today it broke out. In fact, on open it rose to 17.20, and that was buying through the day. So this is a breakout. And if you do listen to Oz Business Corp, you would have heard, this was maybe a month and a half ago, Howard Coleman, Team Invest, say, well, Technology One is really expensive right now. I wouldn't buy it. He's a shareholder. I think he's a long-term shareholder, but he wouldn't buy it at a price earnings ratio of 50. He'd wait to see where the share price fell to maybe $14, something like that, because it does it every year. But maybe if he looked at charts, he would say, well, this is a breakout. Maybe now is the time not to be selling Technology One. So I wouldn't be selling this at all. I am a shareholder, by the way, and I have no envisions. I'm not envisioning of even thinking about selling of Technology One. It's a high-quality company, and even though it is expensive, if the company keeps on growing, it's going to remain expensive. Breakout, Technology One. Someone did ask me about Resolute Mining, so I thought I'd just show you Resolute Mining in this particular video because it does look interesting. And again, this could be a potential breakout. It's got above the highs we saw back in April last year. There it is. It's got above the highs just today, up 5.94%. So a potential buy, trading or breakout for Resolute Mining. Go Resolute Mining. And hopefully, here's my comment section. I won't be able to find it now. Here he is. John Channel. Can you do one on Resolute Mining? Do you think it has broken out now? It's above 50 cents. The answer is, well, now I definitely think it's broken out because it's gone above these old highs. Yeah, the last time share price of this company was this level was way back in 2021 when I was in this downtrend. And I'd say this is a potential breaking out. I just maybe wait. And again, the company share price will be correlated to gold. However, I think gold fell. But again, if you do look at Resolute Mining's chart, it hasn't really run up significantly amount with gold. It's starting to, but it should be still correlated to gold, and the chart just looks good at this point in time. Chart looks good. I think this is a breakout. Oh, potential breakout. We'll call it a potential breakout. I need confirmation the next few days. It needs to remain above about 52 cents, but definitely looks like a breakout. And BCC, what happened to BCC? I noticed this company was on the worst performing list today. Oh, yeah, it's broken out in a bad way. So I had a line right there, and I think we'll have a look at the weekly chart. You'll be able to see why I put the line there. The lows we saw back in the COVID-19 financial panic at around about 15, 16 cents. Did get lower in 2017 through to 2019. But look at that, 1 day, share price down 20% on not big volume. This was just people getting out because the share price has broken below a support level. So this could be just, investors looking at a technical level, a support level being broken. That's maybe why the share price has plunged today. Possibly, I don't know. Didn't see any news release from the company. Oh, they did release something yesterday. Zolio joint venture arbitration update, but it was not marked sensitive. So it should not have forced the share price down because it was not marked sensitive. And finally, video has gone on a little bit longer than I wanted to. I was going to do answers and replies section, but this video has gone too long. And finally, Vulcan Energy. So for those who do follow these videos a lot of times, I did buy some Vulcan Energy shares at 373. I then sold, took profits at 540 2 days ago. I didn't sell everything. I sold, what was it? I sold my profit. Did I sell my profit or my original capital? I forget which one. I either sold my profit or my original capital, but I maintained a little the holding in this company because I think there is more potential for the share price to run, but it just ran up too hard. We got the selling on the day I sold. Fortunately, I sold at the open. Share price fell, was at 10% on the day, 11% on the day, and share price has already recovered. But I'm okay with that because I still maintain a bit of a holding in Vulcan Energy, and I don't know which way the share price is going to go from here. Just the share price is running too hot for me to have a complete holding in that company right now. And that's all I'm going to have for today's video. If you do want me to do a my largest 10 holding video, just leave a comment in this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.